everyone.
Hello. Oh my
Thank
gosh,
you
I'm
all for joining
excited
us.
but nervous at the same time.
Exactly.
Wow. Okay. So we are officially live. How do you feel, B?
I feel good. I am ready. How do you feel?
I feel good. I'm ready to
Yeah.
get into it
Let's
and get
dive right on in. Yes.
knowing about everything that's going on. So I just want to say hi to everybody out there. Welcome and thank you so much for joining us tonight. My name is Tiffany McMickle. I'm a licensed realtor and broker behind my brand new real estate firm, Estate Bae, and we're based in Atlanta. I'm excited to kick off this conversation and help you get some real answers about buying your first home. Whether you are just starting or you're ready to make a move, you're in the right place. And I am joined by the beautiful Brittane Jenkins. Go ahead and introduce yourself, B.
Hey, everyone. My name is Brittane Jenkins. I am a mortgage loan officer with Capital Federal Credit Union. And I have been in the lending industry for the last 17 years and real estate as well. So I'm just excited to be here with you all and the great Miss Tiffany, and looking forward to having a great webinar tonight.
Excellent. All right, let's jump right into it. I'm going to go ahead and do our presentation here.
All right, I feel it. Perfect.
There we go.
Got it.
All right, so this is the first time buyer blueprint, your Atlanta homeownership game plan. And we're going to bring to you some quick facts, things that you need to know, the basics, the processes, and of course, if you have any questions beyond what we shared tonight, we're going to give you our contact information, and our contact actually should be in the description bar. But there is a live chat going on. So if you have any questions or anything that comes up as we get through this seminar, feel free to drop it in the comment section or drop it down in the live chat. Okay.
All right, let's get it.
So what to expect tonight? Well, we're going to tell you a little bit more about us and get into what we call a 5-step home buying journey. Of course, the home buying journey is pretty extensive, but we've simplified it into just 5 steps. Then Brittane is going to take it over and go into depth on financing 101. And then I'm going to give you some buyer knowledge, some stuff that you would need to know if you're just getting into the market and just starting to uh, to proceed with your real estate purchase. Excuse me, the nerves are getting to me. So I'm going to proceed.
You're doing good. Yes.
Well, my name is Tiffany. Like I said before, I am a real estate broker as of 2025. I've been in real estate for about 17 years. I started as an assistant to my uncle, who's a broker in the Washington, D.C. area. And I essentially assisted him while I was in college. And from there, I kind of was using real estate, or I had real estate as a hobby, essentially. Like I knew that I loved watching real estate based TV shows. I knew that I loved design work. I knew that I wanted to build and all of these things, but I never really thought that this could be a career for me until I decided to make it a career. I started by just getting my license because I wanted to learn more about the real estate industry. I hadn't had in my mind that I wanted to help others, but I did want to learn a little bit more about the industry that I love so much so that I, as an investor, can have more knowledge and go into the market with more confidence. So that's how I started. And then it snowballed into several different clients that were referrals and people who found out what I was doing with my own real estate deals and my investment strategy with Airbnb and short-term rentals. And I just started helping people. And from there, I began a journey of representing clients, and now I've decided to fully represent myself as a broker. So I got my broker license earlier this year and officially have opened up my own firm. So I'm looking forward to continuing to help clients and continuing to get more in depth into the real estate industry, connecting with other people that are working in the real estate industry in Atlanta and beyond. So I can't wait to see what my new venture is going to undertake and where we're going to go from here. So that's all I'd like to share about me.
And my name is Brittane Jenkins. I am, again, a mortgage loan officer with Capital Federal Credit Union. Well, I've been in the lending industry for the last 17 years. I actually started fresh during high school. It was my junior year. I was an intern. And just after graduation, I just continued to pursue the finance industry. And then that grew into me doing real estate investing and transferred over to mortgage loans. So I'm definitely happy to be here. And my motivation is to help buyers secure their dream home and make the process as seamless as possible and with less stress, because the financing process, as we all know and have heard, can be a very stressful process. And my goal is to help alleviate some of that. So I'm definitely happy to be here on this journey with you all, and I'm just excited to just dive in with you all tonight. And thank you so much, Ms. Tiffany, for inviting me along so we can do this together. So,
Of course, of course. So I'm very excited to go to do this with Brittane. Brittane has been such a resource for me in the short time that I've known her, and I definitely believe that she's, and I refer her to everybody that I know who's looking for some
and
guidance in
likewise,
the realm.
and
So stay.
likewise.
Yeah, this is truly an expert we have. So we're very lucky to have you here with us. All
Thank
right. So
you.
the 5-step buying journey. So this is the roadmap that we've created to just home ownership, broken down into manageable phases. So first first things first. Before you get started on your real estate journey, it's important that you prioritize your financing. Okay. There's several different ways to acquire real property. You can use cash, of course. You can finance. You can get a gift or another stream of income for a purchase. But essentially, you want to lock that down first. Why do you need to lock that down? Well, the primary reason is because in order for you to narrow down which property you can buy or what you'll be eligible to buy, you want to know what your finances look like. You want to know what you have in the bank. You want to know what you're eligible to qualify for if you are financing, and you want to have that ahead of time. You want to know what those numbers are before you hit the ground running, before you start looking at property, falling in love, trying to find things. It's important that you have that part first. So that's number one. We'll get into depth on each of these phases. So I'm going to just do an overview right now, and then we'll go into depth a little later. So pre-approval is more extensive than a pre-qualification, and Brittane will break that down a little later. All right, step 2. You want to strategize your home search for success. So we want to look at and hone in on what it is that you actually are looking for. Everybody has their own taste. Everybody has their own desires, wishes, and wants. And it's important that we strategize that, figure out exactly what we want to target, focus on that, and then go in and try to negotiate the best position for you as a buyer. All right, that's going to come by given, I always ask people what their desires are first. Like, what is your must haves? What is your must wants? What is the deal breakers? For me, when I first purchased my property, a deal breaker was a garage, right? So things that you can't live without. And then we need to know the things that you can negotiate on. So we'll get into that a little further in the presentation as well. Step 3 is going to be making an offer. Once you've honed in on a property and you've fallen in love with it and you're ready to move on it, we have to make an offer. We'll go into depth about what an offer is, how we are presenting these offers, and what happens afterwards. But essentially, what you're doing is making an offer to purchase. So you are letting the seller know that you are interested in buying their property for a particular price. We do that in a very strategic way to make sure that you are getting the best bang for your buck, but also that you actually are competitive and will actually win the offer. So we'll get into that in a little bit as well. So that's number 3. All right, number 4 in the buying process is going to be all of the essential paperwork processing that comes after an offer is accepted. So once you have established a property, you have made an offer, and the offer is accepted, you have to go through a process, a several step process that will include legal paperwork, legal searches, and things that will essentially protect you as the buyer, but also protect your lender if you are financing the purchase. All right. And the last step is closing day. Closing day is essentially the day that you receive the keys, the day that title is transferred into your name, and you become the new owner of the property that you have searched long and hard to find. So closing day is a very special occasion for everyone at the table, and it's essentially the moment that that sums up everything that you've been working hard for. So we're hoping to get you all to the closing table very soon in your own purchase.
Yeah. And that is a perfect segue, Miss Tiffany. So now we're going to discuss the financing piece of it, financing 101. Hopefully it's not too long overdrawn, but I did just want to touch on some very important pieces that'll help us both get you to your dream home. Okay. So we're going to start with, like Miss Tiffany had mentioned, the pre-approval versus the pre-qualification. Now, the pre-qualification is a quick, informal estimate based on self-reported financial information. And typically what usually happens is the realtor or the broker, they're going to require a pre-qualification letter before you can start viewing homes and going through, different homes and walk through homes and everything like that, right? So this process is where you're going to come to me and say, hey, Brittane, I am interested in moving forward with my home buying journey. And I want to see if I can get qualified for a house for this certain amount. Okay. And that's where I'm just going to get just some information, just some preliminary information from you, like how much you think your income is a month on average, what's your total of debts that you pay a month. So that way we can create like a get a calculation of how much your income to debt ratio would be, how much you might be able to afford. And of course, we'll go into that a little bit deeper. So that's just to get you through the door so you can actually start viewing and seeing homes, okay? Then we do the pre-approval, and that involves a more rigorous verification of your income, assets, and credit. So this will result in like the conditional commitment from us. And this will put you in a better position to look more attractive to sellers whenever you're ready to actually put in or go under contract on a property that you do find. Okay, so there's pre-qual and then pre-approval. And the pre-approval, that's where we'll start collecting the actual paperwork, and that's where we'll start pulling your credit reports and looking at your debts and stuff like that. So the first step is just to get the pre-qual, and then we'll move to the pre-approval, and then the next will be underwriting and then clear to close. All right. And so there are many different loan options that buyers can obtain whenever they're ready to make a purchase, but we're going to discuss the 3 main ones, or the 3 most popular ones that first-time home buyers use. We have FHA loans, which they're usually known for lower down payments and flexible credit requirements. And then we have conventional loans, which they're not government insured, and they usually often require higher credit scores, but you get a little bit more options and more opportunities for the buyer on conventional loans. Okay, and then we have our VA loans, which they offer exceptional benefits like 0% down and no income to debt limitations as well. And these are for our service members, and we'll go into that as well. Okay. So let's start with the FHA loan requirements. So The median minimum credit score is 580. So we pull 3 different credit reports. We pull Experian, Equifax, and TransUnion. And we're looking for your middle score. Your middle score out of all 3 must be 580 or higher in order to qualify for an FHA loan. Okay. In order to qualify for an FHA loan, the home must be your primary residence. So this means that you must be living in this particular property for this FHA loan. Okay. And the minimum down payment is 3.5%. That down payment can vary, but that is the minimum to start on the FHA. That is the required amount that you'll have to put down on our FHA loans. Now, mortgage insurance is also required on all FHA loans. This is insurance that protects the lender in the event of default, foreclosure, in the event of death of the buyer. It's just basically a protection that is required on all of our FHA loans, no matter the loan to value, no matter the price or anything like that. Okay. And now the debt to income ratio cannot exceed 50%. I did put a little asterisk there because there are some allowances where we might be able to go over that amount, just depending on certain factors. Now, debt to income means we're going to take a look at your gross income, which is your pre-tax income. That's before taxes, benefits, and insurance is coming into play. So that is your beginning income. And then we're going to take a look at your total monthly debts in order to come up with this ratio. Just make sure that you're able to afford the projected monthly payment, mortgage payment. So that amount cannot exceed 50%. Typically, might be able to go over an additional 1% to 2%, but that's in certain situations, and that's what we're here for. That's what I'm here for, to make sure that we can make all these numbers work for you to get you into your perfect home. Okay. And then the 2-year employment history with no 6-month gap. So you do have to have a minimum of 2 years on the application. Doesn't necessarily mean that you have to be at your current employer for 2 years, but it must be a straight 2-year history. So if you just left your job and you started a new job and you've been there 6 months, but your previous job was a year and a half, there's your 2 years right there. So as long as it's 2 years history in the application, you're good to go there. And then the maximum seller concession is 6%. Now, seller concession, that is the seller's contribution towards the purchase of the home. So that's the seller's contribution to you for the closing costs or expenses that the seller can pay towards the purchase of the home. And usually your realtor or your broker will negotiate that. So that can also help when it comes to your closing costs and fees that are associated with this home buying process. That's our FHA. And now we have the conventional loan requirements. The minimum for this one, the median score must be 620. Now this one, you can accept all occupancy types. So you don't necessarily have to be a primary resident. This can be your secondary home. This can be a vacation home. This can be an investment property. And you can have multiple convention loans. Only with FHA, you can only have one FHA. So even if you have 3 different properties, only one of them can be FHA. The rest have to be something other than that: conventional, VA, investment, just something different. Okay. Now on these FHA, the minimum requirement is 5%. That is the minimum down payment required on FHA. I'm sorry, my apologies. On conventional loans, the minimum down payment is 5%. Now, the good thing about the conventional is that mortgage insurance is not necessarily required on purchases or mortgages or loans over 80% loan to value. So that means if the value of the home appraises more than the actual loan amount that you're taking out, if it's 80% or less, then you don't necessarily need to have mortgage insurance. And that usually comes with either putting a large down payment, or that comes with the home being appraised more than what the seller is actually selling it for. So as long as that percentage is 80% or less, you don't have to worry about mortgage insurance. Okay. If it's 81, 90%, or if it's valued at the exact amount that the seller is trying to sell the home, then you're going to be required to have a private mortgage insurance. Okay. Now, on this one, the debt to income ratio cannot exceed 49%. I know that sounds like a weird number, but it is a restricted number. 49% can't go over that at all whatsoever. This is where it's a little bit different than the FHA, where FHA may have a little bit more flexibility. And you'll also see where VA has a lot more flexibility than it does with the conventional loans. And this one, you can have a 1 to 2 year employment history on these applications. So it doesn't have to start with a minimum of 2 years. It can be 1 to 2 years. And then the maximum seller concession is 9% on these conventional loans. So you get a little bit more allowances on the seller concessions for our conventional loans than you would any other loan. Of course, that does depend on the down payment as well. Okay. All right, and lastly, we have our VA loans, which are for active service members, veterans, and surviving spouses. The minimum credit score still median must be 580, and this must be your primary residence in order to obtain a VA mortgage loan. Now, this one, there is no minimum down payment, no mortgage insurance, no debt to income requirements, no minimum employment history. You see, on the VA, you get a little bit more, but of course, you must be an active service member, veteran, and surviving spouse. Okay. I did include the link at the bottom, or the website at the bottom, because there are certain restrictions on how long you have to be an active service member or how long you've had to be a veteran in order to qualify and be eligible. But and that is a list, but you get to see the benefits that you get under the VA loan if active, veteran, or surviving spouse. Now, on this one, the maximum seller concession is only 4% though on this one. So you have some perks, and then you have some drawbacks. But I feel like the perks on the VA loan definitely outweigh the drawbacks for sure. So now we have down payment expectations. So down payment is a significant upfront cost when buying a home, and it's representing a percentage of the purchase price. So while 20% down is often cited as ideal to avoid the private mortgage insurance that we were just discussing, and to cover the closing costs, we do have loan programs available that can offer much lower percentages, or down payment that can offer much lower percentages for down payment acceptance. And with Capital Federal Credit Union, we do offer 5 down payment programs, but I'm going to discuss just the 2 major ones because Capital Federal, we lend in all 50 states. So we do have programs that can cover any states. Okay. The 2 most popular ones that we offer is Smart Buy, and that covers the FHA loans. And then we have Springboard, which covers conventional loans. In order to qualify for the Smart Buy, if you're wanting to do an FHA loan, your credit score must be 620 or higher. Now, this one is available in all 50 states. My apologies. It's available in all states except New York. So unfortunately, New York, we're going to have to find another down payment assistance program for you, which I'm happy to do so. If we have anyone that's living in New York or wants to buy a property in New York, just feel free to let me know. And on the Smart Buy, we're able to go up to 3.5% to 5% for down payment assistance. Now, the difference is you could do 3.5. In order to qualify for 3.5, your minimum credit score must be 620. In order to get the 5%, you must be at 660 or higher in order to get the 5% down payment. And the Homebuyer education course is required, and they'll send you that information or advise you of where to obtain the course or how to get the courses in order to complete that to qualify for that down payment assistance. Okay. Now we have Springboard, and that covers our conventional loans. That minimum score is 660, and it's available in only 18 states. Now, this one can go up to 4% down payment assistance. And the home buyer's education course is also required on this one. Okay. So these are our 2 most popular ones. Yeah.
Brittane, before we get too far ahead, could you explain to people who may not understand when a down payment would be required and when it would not be required.
So the down payments are going to be required. Minimum down payments, only time down payment is not required is on VA. So any and all loans, FHA, conventional, they have a minimum down payment required. Even if you have perfect credit, you still have to adhere to those minimum down payments. Now, just as far as how high it can go, because that's the minimum, but of course, as we can see, it can span up to 20% down needed. So that depends on your credit, your income, your assets, if you have gift funds, adjustments, stuff like that. So now we're just going to touch base on the credit score basics, because this is a factor, major factor when seeing if you qualify for a down payment assistance or even just qualify for a mortgage loan in general. So a higher score generally translates to better loan terms, lower interest rates, and more favorable down payment options. But the three major factors that can impact your score and impact the decision are disputed credit accounts, bankruptcies, and foreclosures. This is what's going to go into what makes up your credit score in order to get you approved for a mortgage. So with conventional loans and VA loans, disputed credit accounts are not allowed. And what disputed credit accounts means is that if you have an account on your credit reports that you feel is not reporting correctly, if you were a victim of identity theft and someone opened up credit in your name and you're working with the credit agency to dispute it, and you're working with the creditor to dispute it, that all must be resolved before you can proceed with the mortgage. So they won't allow it to just stay currently in dispute. It must be resolved or removed before proceeding. Now, with FHA, you have some allowances there. So sometimes they will allow disputed accounts with a letter of explanation from you, from the buyer, something like that. Okay. Late payments are also accepted in some cases. So we all understand that sometimes things happen. Nobody has perfect credit, because if we did, then nobody would ever need to. Having perfect credit, you wouldn't even really need to buy anything, or you can get anything you want if that's the case. So we're aware that, late payments, happen, and some late payments are accepted. So we're not really too worried about that, but late payments can also negatively impact your credit score as well. So we want to make sure that we at least keep you above the 580 or higher. And this is just kind of touching base on what things you can do to make sure that your credit stays in shape before applying. Okay. Now, bankruptcies and foreclosures are also allowed whenever you apply for a mortgage, but there are restrictions. Before you apply for a mortgage loan, and if you've had a bankruptcy in the past, Chapter 7 must have been discharged for 4 years from the discharge date for conventional loans, and Chapter 13 must be 2 years for conventional loans before you even apply. So you don't want to suffer a credit report inquiry if you know that you still have been only discharged for bankruptcy less than 2 years or less than 4 years. And this is just for conventional. Now with FHA and VA, Chapter 7 and 13 discharged for 2 years. So if it's been 2 years for either chapter, then you're welcome to go ahead and reapply. And with foreclosures, we're not going to penalize anyone that's had a foreclosure before. This just because something happened in the past doesn't mean that you can't get another home, right? So we just have certain restrictions, and it's 7 years for conventional, 3 years for FHA, and 2 years for VA. So that means just from the date of foreclosure, can't apply for a mortgage until 7 years if you want to do a conventional, 3 years for FHA, and then 2 years for VA. Okay. So it's just important to kind of just take inventory of what things can, has a major factor on you getting approved for a mortgage or not, or what things you can work on, or at least so you can see how much time needs to pass, and you have this time to work on your credit. So that way it puts you in a better position to be able to buy your home in the future. Okay. Let's see. All right, so now we're going to I'm going to show you like the next couple slides are just going to be an example of how it works as far as with the loan estimate, is the cost to accept or expect in Atlanta. You just make sure that you're budgeting beyond the actual sticker price. Okay, because purchasing a home involves much more than just down payment. There are closing costs, property taxes, and insurance. So on the next two slides, I'm just going to give you an example to show what we look at and what fees and everything like that are associated with the home buying process. Okay. So, hope you can see this clear, Tiff?
Yes, I can see it. It may need to be expanded. I'm not sure if that's possible.
Let's see. Maybe need to zoom. I don't know how to zoom in on this thing. I have no idea how to zoom in. Sorry. I thought I can see it, but I might be hoping it's not going to actually. I guess you probably can't really see the numbers too much unless you look. And I got my face all in the camera. I'm sorry. Let's see.
We can surely send a copy of a sample loan estimate, but this essentially will break down all of the costs that you would incur in your real estate purchase.
Exactly. So like for this particular client, this was back in March that I did a loan estimate for him. And it was an FHA loan, and the sales price of the home was $335,000. And the loan amount was only for $323,565 because he had to have that 3.5% minimum down payment on FHA. That is a requirement. But the loan cost details, you have origination charges, the services you cannot shop for. I'll read them out. It just says appraisal fee, credit report fee. There is a flood cart in there, tax service fee. These are the fees that you can't shop for. You can't negotiate. And then, of course, there's the private mortgage and the mortgage insurance that he's required to have. The ones that you can shop for are the fees, like the closing attorney fee. You can shop for a closing attorney. They have different titling fees that you can negotiate and shop for as well. And then we have on the right side, you have your taxes, you have your homeowner's insurance. That's all, everything that comes is like letter A through J, all of that adds up into your closing cost details. I apologize. I really thought that this was much bigger, but so you can see the actual numbers, but at least you just kind of see how it's broken down as far as what's all included in that closing cost. And at the bottom, it shows the down payments, the seller credits, which are the seller concessions. There are additional adjustments and other credits in there as well that came off the closing costs. So all in all, if I'm just going to go back, I did see the number. So his original down payment or estimate closing costs to come to the table was $18,289. And his estimated cash to close ended up reducing down to $1,724. So that's about $17,000 worth of credits and down payments that the client, had to go towards closing costs and didn't have to come out. Now, he did not come out of pocket $17,000. That's not what I'm saying. But he did. They did factor in his down payment. They factored in other seller credits. I believe he got like $9,000 worth of seller credits to go towards his closing costs. There were other adjustments in there. So just because it may look like you have a lot, like your realtor and your lender are going to be working really hard to make sure to bring that closing cost down. And I just really wanted to show that because I was very proud of that. The fact that it looked like he had to come to the table with 18,000 and he really only had to come to like the table with only 1,700. So different ways that we can make it work to get you in your dream home without you having to feel like you got to break the bank or drain your savings, because that's not what we want you to do.
For perspective, I just did a quick calculation. That's about 5.5. I mean, I'm sorry, 5% of the purchase price was what he was looking at in terms of closing costs. So just to give you a ballpark, every deal is going to be different. And like she said, you have to take into account if you have additional seller concessions or a down payment assistance. So that number can adjust out of pocket significantly for you, depending on what you put in the deal.
Exactly. All right. And I believe that's all I have just for the financing piece. I know we're going to kind of go over the do's and do nots a little bit in the next few slides, but that's all I have. Did you have anything that you wanted to add? I hope I didn't overload. I know it was a lot of information, and that's the reason why we're going to make sure to leave this up so you guys can go back and, review again, or just reach out to us, and, I'd be happy to go over with you all again. Just let me know. Uh-oh, did you freeze? Uh-oh, Tiff, I think maybe you froze. No, we were doing so good. Let's see. Sorry, everyone, if you guys can hear me. Give me just a second. Let's see what happened here. Uh-oh. Let's see. Let's see. I appreciate your patience. It shouldn't be too much longer, everybody. Thank you for joining us. Let's see. And we are almost done, but thank you guys for joining. Okay, she's getting ready to log back in now. See, I might be able to take over. Let's see. Let's see. Uh-oh. Okay, well, we'll give Miss Tiffany another moment, but I'll just go ahead and continue. So the next is going to be make an offer and crafting your winning bid. So you guys will have to bear with me because this was Miss Tiffany's part of the presentation. So I'm just going to try to go through as best as I can. She's the actual real estate pro there, but I'm going to definitely try to go along. So she's going to be discussing the current trends and what's hot in Atlanta right now. We have the neighborhood spotlight. We have Johns Creek area, which is known for its excellent schools and family-friendly lifestyle. And we have Vinings, which is offering a blend of charm and convenience near the city. Then there's West Midtown and in-town Atlanta. It's popular with young professionals and creatives. I actually work in the Vinings area, and that's over there by SunTrust Park, where the Brave Stadium and everything like that. So that area is pretty popular and it's beautiful over there too. Okay. Let's see. In the price trends, we have the median sales price in May was $435,000. This is the sales price for the home was $435,000, and an increase of 0.3% from last May. And the average sales price was, wow, okay, so the average sales price was $552,500, up 2.5% from the previous year. Okay, so as you can see, these home prices are definitely increasing. So you definitely want to try to go ahead and get in now before they get any higher. And then we have the buyer versus seller markets. We have May marks another month of strong growth in available homes for sale. Oh, here she goes. Okay. Yes, I have I got down to the buyer versus seller market. So I was just really rambling on your facts because I knew that you were the one that had the expertise to be able to explain it to everyone. So I will let you take over.
Yeah, so sorry about that, everyone. I had some technical difficulties. Um, so yes, so we're on to the next part of, so part one was getting your finances together or getting your pre-approval together. And part two is getting into your search and trying to find out what is next to secure the property that you're looking for. Some people are looking for their forever home. Some people are looking for their first home. Some people want an investment property. Everybody's situation is different, and everybody's desires are going to be different. So whether you are looking for a suburban neighborhood, an urban neighborhood, or somewhere that is just raw land, every neighborhood is going to give something different. If you are currently living in Atlanta, you know that Atlanta neighborhoods have their own personalities, and every neighborhood offers something different. I just wanted to spotlight a few neighborhoods that are kind of popular right now, starting with Johns Creek. I don't know. I apologize if any of this is redundant because I lost service.
That's okay. That's okay. Please explain it better.
Starting in the upper in the far north part of Atlanta, Johns Creek is really popular for families now. That whole area right now is booming in terms of families wanting to be in that school district, and also be in those neighborhoods are very popular. The Vinings area is also an area that is very popular, and it's going to be that area right around the Cumberland area, right near the Truist Park. So it's going to offer something a little different. It has convenience to the city, but it is offering some suburban living as well. Now, of course, West Midtown and in-town Atlanta is going to be popular with young professionals, people who are working in the downtown area, people who like to frequent events or the parks. So the line,
No.
things like that.
I think it's breaking up a little bit.
These are
Tiff, it's breaking up really bad, girl. I'll tell you, y'all, AT&T, they don't play sometimes. That's true.
some of some spotlight neighborhoods, but
Dang. I am so sorry, y'all. If we practiced, and this was working perfectly before, but I don't know what's going on. Let's see. All right, so what I will do is I'm just going to dive back into the finance piece while we wait for her system to come back up. But And we'll go back to these slides here. This is just her going over how it works with the process during the making the offer, the sellers accepting the offer, all of that. So I'm just going to go back to what usually happens whenever we get to the underwriting piece and the do's and don'ts and top mistakes that first-time buyers make whenever they're trying to purchase their home. Okay, so it can be complex and they often encounter a couple of missteps, but that's what I'm here for, to help guide you and help walk with you through this journey. So that way we can make sure that this is a seamless process and we don't want to have to keep pivoting in the event that sometimes that does happen, but we just want to make sure that all of these pivots leads to the closing table. Okay. So the first thing is not getting pre-approved first. Of course, we did go over that, the importance of making sure to get pre-approved, because we don't want you to set your sights on your dream home and you haven't even secured financing for it. And the time that it takes to get you pre-qualified or pre-approved when you haven't already made that could be the time that it takes for another buyer to slide right on in and take your dream home for you. So we want to make sure that you are in the position to get pre-approved before you actually find your home. Okay. Skipping inspections. This is another important step whenever you're going through this home buying process. And once you have found your home, you want to make sure that you do not skip inspections, because skipping inspections can lead to costly repairs that you'll have to do or deal with after you've moved into the home. And these repairs can be very, very expensive. And the very first time I moved into my first home, I did the inspection. I went with the inspector and he told me that the AC unit was in good shape. It just needed a filter. Lo and behold, after I moved in and got the keys, it was in the middle of winter. And lo and behold, the AC unit was in bad shape. It was actually in really bad shape. So I had to pay a lot of money out of pocket to replace my AC unit. So this is one of the reasons why, not just skipping inspections, but just making sure that you follow up and making sure that the inspections are accurate, or making sure you have a second opinion if you feel like they're not, or appraisers actually come in and do that as well. So welcome back, Ms. Tiff.
Hello.
I just went ahead and just skipped forward, and I was like, well, we'll come back to your slides so that when you get back, I just want to just go ahead and discuss the top mistakes so that way we can just keep this moving.
Great.
So,
thank you so much.
I want to take over this part because I know we were talking about like the inspections and, you know, the choosing the wrong lender agent, all of that stuff. And then I'll go over the next slide.
You want to keep going with the stage?
Yes, sure, no problem. So definitely don't skip inspections. You won't have to worry about choosing the wrong lender agent because you have me and Ms. Tiff. So you're already one up on that one, y'all. Y'all don't have to worry about that mistake. You got us, okay? And not budgeting beyond the down payments, which is something that we discussed. Now, we don't want you to drain your savings or anything like that, or take out new loans, which we'll get into the next slide, but just making sure that you are in the position to, have these upfront costs, which will be the appraisal will be upfront, the inspection will be upfront. It is part of the closing cost, but that is something that you'll have to pay upfront versus waiting to get to the closing table. And so it's just important to make sure that you're budgeting for these additional fees. Not for the additional fees, but just budgeting for these fees. So that way you won't be draining your savings by the time you get into the house. You may want to use some of your savings to buy new furniture or, anything like that. So that's not what we want you to do. We want to make sure that we put you in a position and help you budget properly. Okay. All right. And then these are my top no-nos as well. I put them on the next slide, but these are very, very crucial during the underwriting process. I need you guys to hear me clearly on this, because this is what can make or break your application. So The fifth one is applying for new credit or making large purchases. Now, applying for new credit is going to it can reduce your credit score. If you're already at a lower credit score, the last thing we want to do is tamper with that score. So applying for new credit can drop your score into a range where we're not even able to proceed anymore. If you're already at a 580 and you apply for new credit during this process, that 580 can turn into a 570 or a 560. And then that knocks you out of the running. So we want to make sure that you don't apply for any new credit. And also applying for new credit can also increase your debt to income ratio, which also, once again, if you are over that 49 or that 59% debt to income ratio, we have to send your loan file back to underwriting, and then that can possibly cause you to lose out on your home. All right, so it's just very important to stay. I know sometimes we kind of get excited and we think that, we can kind of obtain this loan. A lot of times what we see as our buyers moving forward with purchasing an auto loan during this process, that auto loan payment wasn't initially factored in to their list of debts. And so that's going to completely change things if we have to factor in a brand new $300, $400, $500 auto loan. And if you're already borderline on that ratio and your debt to income, that can completely change things for you. So we just want to make sure that you do not open up any new credit, make any large purchases during this process. Now, after you have the keys, feel free to go ahead and buy that new vehicle if you feel like you budgeted for it. But at this present time, just to make sure that we get you to the closing table, please don't do that. Okay. And also changing employers or taking unpaid leave. This is another issue that can come up in the event you're trying to purchase a home. Now, the main issue is taking the unpaid leave can reduce your overall average income, and that plays another factor into your debt to income ratio. A lot of these are going to be because of either credit or debt to income. These are the reasons why you do not want to make these mistakes, because that is what's going to determine if you get to the table or not. And with the changing employers or taking unpaid leave, that's going to reduce your average income of what was pre-calculated or was already calculated to get you pre-approved. Your income drops, then we have to restructure everything and send you back to underwriting. And if your income to debt ratio increases, that can possibly change things for you getting to the table. Okay. And let's see, the next one, depositing large amounts of cash. Now, as great as it sounds to have a lot of cash on hand, I wish I had a mattress full of it. Do not deposit it into the bank if you have it. Just sit on it, because once you deposit it into the bank, all funds that are deposited into your bank account must be sourced. And cash is something that is very hard to source. So if you were trying to use a large cash deposit to go towards your down payment, or you were going to deposit the funds into your account to pay off some bills or anything like that, if it's cash, it cannot be sourced, which means it cannot be used. And if that was factored in getting you approved for the loan, then it's going to completely change things and change it back to you having to go back through underwriting. And if we can't source it, we have to remove it. So we come up with this issue a lot whenever it's self-employment income, where you guys get paid in cash. They just deposit large amounts of cash. They sit on it and just deposit it all at once into the account. We can't use that as income because there's no way to be able to determine if it came from your business or not. So just be very wary of depositing large amounts of cash. Okay. And then closing accounts. This is also a big no-no, because you don't want anything to mess with your credit score. One thing that will drastically drop your credit score is closing credit card accounts, lines of credits, any type of loans or anything like that. Closing those can have major implications on your credit score. I have seen it firsthand where a client closed a credit card before applying and her score dropped 100 points. We cannot have that. That's too big of a drop. That can now pay your balances. Now you can pay your credit card balances, but just do not call the credit company and tell them that you want to close the account. Okay, that's just, I wouldn't recommend that even if you weren't purchasing a home. Do not close credit card accounts. That's just financing 101. Okay. And yeah, so just make sure, we just want to make sure, like with the credit piece and the debt to income ratio, like all of those are usually the two main things that I see can stop someone from getting all the way to the closing table. I have seen it where, and one thing about the credit reports, which is why I have to stress about applying for new credit and closing accounts, your credit is pulled at least 3 times throughout the process. The first time, they're going to pull it to get you pre-approved. And then the next 2 times, these are soft pulls where it's not going to impact your credit score or anything like that. You won't even be able to see that we're seeing this. But they check your credit score twice to make sure that you have not obtained new credit and that you have not closed any accounts, or that nothing else new has popped up on your credit report. And this process is done in the middle of underwriting and then sometimes 5 to 10 days before closing. So it's just very important to make sure to stay consistent with your credit and your lines of credit and everything like that, because I've seen it where someone will open up a new line of credit and think that it won't show up. And 2 days before closing, we have to, well, actually, I think it was 5 days before closing. We usually do ours. 5 days before closing, we saw a new line of credit that popped up. It was a $600 payment, and that completely knocked her out for the her debt to income ratio. It spiked her debt to income ratio extremely high, and unfortunately, this client could not proceed to closing. So just sharing some insight of, the do's and do nots of what we think that can help you make sure to make this a smooth process for you. Okay. Welcome back again, Ms. Tiff.
Thank you.
All right. So
yes.
I was gonna say, if you'd like me to stop sharing my screen, or can you navigate through the slides as well?
You can leave it on there. There are so many nuances to the home buying journey. So listening to your mortgage broker, listening to your real estate broker is going to be key in making sure that you get all the way to the end, to the closing table. We're not telling you these things because it's our preference or because we want to pocket watch or anything like that. We literally know that if you do certain things, it will prevent you from proceeding. So take heed to all of these mistakes, and we're going to try to not make them. Of course, we're going to reiterate them when you work with us, but it really is important to listen to them because it really can impact if you can actually close on the property. I do have some other stories myself, so I'm going to spare you all right now because we do have to backtrack. I want to get to part 2 where we were before, which was getting into the smart search. Okay. Again, every buyer is going to be different. Everybody wants something different for their home purchase, for their buying journey. So it's going to depend on who you are, your lifestyle, what you're looking for, what your family needs, and hey, what speaks to your heart. Because when I walked in my house the very first time, I knew it was my house. So it's going to be something that is very personal. This is a very personal journey for everyone. So moving on to the next bullet point of price trends. I don't know if everybody is in tune or in the know of what's happening in Atlanta right now, but the median sales price for homes are $435,000, and the average sales price is $552,000. This is only a 2% increase from last year, but we still have appreciated, and we still are running in a really high-end area, or high-end range, I should say. This is not going to be the market or the sales price that's going to be for people who are scared to enter the market. This is a very, these are high prices that we're talking about. and very competitive prices that we're talking about to be in the city of Atlanta. So just keep that in mind. However, something that is going to be the advantage for buyers now is because it's a buyer's market. So what does it mean when someone says the buyer's market versus the seller's market? Well, we're talking supply and demand. So in a buyer's market, that means there's going to be more inventory, more homes for sale than there are buyers shopping. Okay. That means you have the pick of the litter. You are going to have a very large negotiating power when you're going in looking for properties, and you also are going to have a lot more options to choose from. We're talking over 20,000 listings on the market right now in Atlanta. Okay, that is an increase of 34% over last year. So we have tons of inventory on the market right now, which means buyers are at an advantage right now. And I don't know if you all know, but the highest demand time to buy property is always going to be in the summer months. Most people like to move between spring, summer, fall. No one likes to move in the dead of winter. But right now is where the market is going to be at its peak. And when it's a seller's market, what that means is that they are more buyers in the market than there are inventory. So very, less properties to choose from, more buyers in the market. That drives the prices up. So right now, because we're in a buyer's market and we have more inventory, it's driving the prices down. That's why we're only seeing an increase in 2% of our a year-over-year increase in sales prices. This is really important for buyers because it means that you have some leveraging power. And when you go into looking for a property and you're ready to make an offer, then we have a little bit of wiggle room here. So that's what number 3 is in the 5-step home buying journey. It's going to be making the offer. I initially, in the beginning of the presentation, talked about making an offer, and making an offer essentially is making a formal contract or purchase from the buyer to the seller. It is typically done by way of representation of a broker or realtor, and hopefully I will be the person to represent you. But essentially what it is you are putting on paper officially in a legal contract that you would like to purchase a particular property for a particular price. This contract will detail the legal description of the property. It will detail the price that you're looking to pay for it, how much you're looking to put down, how much earnest money or consideration you're looking to put down. And we'll get into that in a little bit. And also the different contingencies or another word for contingency would be the different exceptions, let's say. Another word for contingency is exceptions to your contract that states, in order for me to purchase this contract, these things have to be true. So let's get into that a little bit further. So after you've decided that you like a property and you're ready to buy it, you have your financing in place, because remember, that's number 1. You found the property, your ideal property, and you're ready to make an offer. What happens next? Well, first, you and I will work together and we will decide what the best price to offer would be. We look at several different variables to get to this number. Most often in a residential purchase, we are going to be looking at what's called comparable properties, or comps. You may have heard the word comps before. That stands for comparable properties. So what we do is we look at comparable properties within the vicinity. It's typically going to be within a 1 to 5 mile radius of the property that you're looking at. And we're looking to see properties that are similar to the one that you are looking to buy, what they look like, what they're listed at, what they've sold for, and what we want to present to our seller. Okay, all of these different things are going to be important, because you don't want to just throw out a figure when you're going to put in an offer. If we are looking at a property, for example, that is listed at $500,000 and the comparable properties have sold for $510,000, we need to give some evidence to the seller that will justify any difference in price. Because at $500,000, and comparable properties are $510,000, we are already priced below what other comparable properties have sold for. I hope I'm not moving too fast for you all, but essentially we need to be strategic with the price that we're offering the seller, because we don't want to insult the seller. We want the seller to consider our offer, and we want ultimately an approved or an accepted offer. Okay. So when we draft up this offer, after we've come up with the ideal price point to offer, and this again, we're looking at all different variables. We're looking at the condition of the property. We're looking at if there's any work that needs to be done to it. We're looking at mechanicals, if things need to be updated. All kinds of factors at play. You can also factor in where the property is actually located. If it's located on a busy street versus a quiet street, all of these things play into what we consider when we are making an offer on the property. Okay. All right. So once we've decided what price point we want, now we need to go into contingencies or exceptions in order to make our contract stronger. The point of a contingency is to protect you, the buyer, and it is to give you an exit point if your contract is not fulfilled in some regard. Okay. There's several different types of contingencies. We would go into that in depth when we work together, but some of the most popular contingencies are what's called a financing contingency. What that says is that if I do not get the financing that I've applied for, then I can walk away from this contract. Okay, so back to our number one step in the home buying journey, we want to make sure that our financing is in place. And if it does not go through, we, the buyer, do not want to be held liable to still purchase the property if we don't have the financing to do that. Okay, so that's what a financing contingency will give you. It will give you an exit strategy if your financing does not go through, i.e., if you don't do what you're supposed to do. But
Right.
you're going to do what you're supposed to do to get all the way to the end. Okay. Another exception, another contingency that's really popular is what's called an inspection contingency. Typically, in a real estate purchase, you will ask for a certain amount of time between the offer acceptance and a binding agreement. That period will give you an opportunity to hire a home inspector to come in and inspect the home. Brittane spoke a little bit about why you don't want to skip those home inspections. And the biggest reason is because your home inspector has been trained and licensed to look for different things around a property to find out if there's anything that you should be concerned about before you purchase it. It's not just about concerns, it's just about the history of the property. You're gonna know the foundation condition, the roofing condition, all of the mechanical conditions, how old everything is. You're going to know everything. So however much the home inspector will cost, I believe I paid about $500 to $800 when I paid for my home inspection, but they vary in price. And of course you can shop around. But the point of the home inspection is to make sure that you have a very in-depth report of the property you're trying to buy. It's basically your property's Carfax. Okay, so it gives you all the details that you're going to need in order to know what's going on with your property. Every property is not going to be perfect. It's not going to be brand spanking new. It's not going to be perfect beyond repair. Okay. So it's important to take all of your home inspection findings with a grain of salt and to use them to decide if you want to proceed with buying that property or if you want to walk away from it. So your inspection contingency allows you to say, hey, seller, I want a certain amount of time to inspect this property. And once I've inspected the property and I don't like the inspection report, I can now walk away from it. Okay. An inspection contingency also would just give you the time to do it. Okay. So all of these contingencies can be tailored per contract. It's not a one size fit all thing. And then you can include them and you don't have to include them. There's several, again, strategies to make your contract strong or to give you some more safety nets as a buyer. Okay. So those are contingencies. The next thing we include in this offer is an earnest money deposit. Your earnest money deposit is a consideration. Anytime you do a legal contract, you need some sort of consideration. In real estate, that is typically called your earnest money deposit. Your earnest money deposit can be any amount. When you have a average property, $500,000 property, $1,000 earnest money is typically acceptable. When you get into $1 million property, they're looking more into a $50,000 earnest money deposit. So your earnest money deposits really it's the buyer's discretion, first off. Second, it is your consideration for your contract that says, hey, seller, I'm very serious about buying this property. Okay. So when you are considering how much to put down, you need to understand that that the seller is going to see this and use it to decide whether they want to accept your offer or not. What is the earnest money deposit and what is it used for? Again, it is a offer. It is a part of your offer, and it is the consideration part of your offer. What happens to the earnest money deposit during the transaction is essentially it allows you or the seller to walk away from the deal with the earnest money deposit should one or the other fail to fulfill their contractual obligations. Okay, so for example, you have contingencies in place, you have a financing contingency in place, and you put your $1,000 earnest money deposit down. At the end of your financing application, you aren't approved or you don't get your financing straight. Now you can walk away from the property and walk away with your earnest money deposit. Now, let's say your financing contingency didn't exist and you did not include it in your contract. Well, if your financing does not go through and you need to now walk away from the deal, the seller can now keep your earnest money deposit. So again, it's the consideration for the contract that states, I am serious about buying this property. And if I do not buy this property, you can keep it. Okay. So I hope that makes sense. And if I need to go into that any further, and of course, if you work with me, we'll walk through and work together to figure out what your earnest money deposit should be. But again, it's the consideration that you are either going to apply to your purchase price at the end of it, or give out of consideration to the seller if you do not and fail to fulfill your obligation in the contract. After all of that is done, I submit the offer officially to the seller's agent and wait for them to respond. All right. So these are the different scenarios of what happens after you submit an offer. First, the seller can accept the offer. That's just plain and simple. We accept, we like it, we want you to buy it, cut and dry. Okay. The next scenario is a counter offer. What that is the seller likes your offer, but they want you to change something. That can be the date to close. That can be the amount to purchase. Anything in the contract can be modified when the seller counters your offer. Okay. Once the seller counters your offer, the original offer is no longer valid. Okay. Now we have a contract in play that the seller has offered to you, and you can decide to either accept that offer, counter the offer, or reject the offer, just like the seller had in the first scenario. Okay. And the last scenario would be a rejection. The seller just flat out rejects your offer. And that could happen for a multitude of reasons. The seller could be pulling the property off the market. The seller could have accepted another offer. There are so many different reasons why a seller would reject an offer. But if they just flat out don't give us any response, usually what I would do is go in and try to get some clarity as to what happened and why your offer was just simply rejected. Okay. So again, once you've submitted your offer, the ball's in the seller's court. And then once the seller counters your offer or accepts your offer, the ball is now back in your court. So there's a few different scenarios here, and this is actually the fun part, in my opinion, of the whole deal, is going back and forth and trying to find some common ground with the seller, and ultimately an accepted offer and for your property to be under contract. All right, so we are on to the fourth part. All right, the fourth step of the home buying journey is now the paperwork process. We got an accepted offer. We got our seller in play. We're in the deal. The house is under contract. What happens next? Okay, this part here, the appraisal, inspection, and paperwork part, this is going to be probably the most important part of the entire process. Okay. All right. So everybody knows an appraisal is going to be what your lender uses in order to find out. I'm sorry, did I skip a slide? I don't know.
No, that was the right side.
Oh, that's the right one. Okay, great.
Mm-hmm.
All right. So let's talk first about the home inspection. We went over that several times already.
Mm-hmm.
Again, it's really important, in my opinion, even if you don't use it as part of your contract, for you to still get your home inspection prior to closing on your property. You just want to know the history, the details, the in-depth everything about your property from roof to foundation. You want to know everything about your property. So get your home inspection done. I have several contacts that I can refer you to. So you want to have that. It's going to be a big packet all about your property. So it's going to be something that is invaluable to you. Number two is your appraisal. That is typically ordered by your lender. So if you are purchasing a property using a loan or you're financing a purchase, your lender will order what's called an appraisal. The appraisal will tell you and your lender how much the property you are purchasing is worth. Okay. We all hope that your property is worth what you are paying for it. And if you are the lender probably will not approve your loan if it does not appraise for what you are purchasing it for. With the exception, and Brittane can interject if she needs to, the only exception to this is if you have enough funds to compensate the difference of the value. So if your property appraises for less than what you are under contract to purchase it for, you may make up the difference in price by bringing that amount to closing and still closing with your lender with the amount that they are willing to lend you on the property. Okay. So usually the lender will give you a certain amount that they can buy that property for, or they can lend you the money to buy that property for. And if that amount is not enough to purchase the property, then you can still, as the buyer, bring additional monies to the table in order to still make the deal work.
Right.
Is there anything else you'd like to add to that, Brittane?
No, that was very perfect. I will also like to say that sometimes the appraisals can help go behind the home inspection report, because I've seen in certain cases where the appraiser catches things that the inspector may not see. And if you're doing an FHA loan, there are certain things or certain repairs that will need to be completed before we even be able to proceed with the actual the purchase. So I believe FHA requires, the roof to be in good shape, definitely the foundation, things like that. And sometimes the home inspection, if depending on which inspector you get, if they say that, oh, the roof is in good shape, and then the appraiser comes out there and like, no, it's not, then you're going to have to get that repaired before you can actually move into that home. Now, conventional, I don't believe they have certain restrictions, but it does vary depending. But I know for sure FHA requires certain repairs to be completed or certain things to be in good shape before they're even able to proceed.
And ultimately, guys, your home inspection and your appraisal report is there to protect you. We don't want you to buy a property that you don't know the history of, and we also don't want you buying a property that you're paying more for the property than it's actually worth. Okay, so these are safeguards, not just to protect the people that are helping you purchase the property, but they also are there to protect you as well. All right, number 3 is your title search. Now, all of these things are really important, but this title search part, okay? Now, this can be the difference of somebody knocking on your door one day and saying, this is my house, I have legal ownership, okay? Your title search is the process where your closing attorney will order this search. and will check and make sure that there is a clear chain of title. The clear chain of title should have a clear transfer of ownership from owner to owner over the history of the property. Any break of that chain of title, and we can come into question, and ownership can come into question, therefore compromising your ownership stake in the property. Okay, so what a title search does is just make sure that there's nothing in the background of the title transfers that you need to worry about as the buyer. 9 times out of 10, nothing should come up, right? But if something should come up, there's different things that can happen to smooth things out and make things clearer. But you want that title search done, and you want it done correctly to make sure that when you go to the closing table and you sign all of the property documentations as the new owner, that title conveys properly to your name. You want to be the owner of the property that you're buying. Okay, that's ultimately what the title search is going to make sure happens. That the last owner, the seller, is actually the person who is legally able to transfer the title to you, and you now become the new owner. Okay, I hope that makes sense. But that is really important, because you don't want one day from somebody's long lost son or daughter or cousin to to come and say that you are that this is their property and you are not the real owner. Okay, so we want to make sure that we do that title search, and that we have that cleared up, and any nuances in the break of in if there's any cloud on the title, that it's cleared up before you get to the closing table. All right, your homeowner's insurance policy is always going to be required by your lender. If you come to the table with cash, if you're doing a cash purchase, you can opt out of a homeowner's insurance policy. But again, this is a safeguard for you to protect you. I have used my homeowners. I've been a homeowner for 8 years now. I have used my homeowner's insurance 3 times. Okay,
Same,
and these were
same thing, 3 times.
these are major repairs, guys. I'm talking, accidents. Okay, we're talking weather-related incidents. We're talking accidents happening in the house, pipes bursting, floods happening, roof being damaged from hail. All kinds of things can happen to your new purchase. And if you're talking about a property that is 6 figures plus, you want to make sure that you're protecting that property by having insurance on it. Okay, the insurance is not that high, but I will say, just like anything, just like taxes, it will increase over time as your property appreciates, as the area gets better. Your homeowner's insurance policy will also increase as well. So that's just something to keep in mind. But just like with your car insurance, you can always shop around for the best rates on your homeowner's insurance policy. You don't have to go to a particular homeowner's insurance company. You can shop around and find the one that works for you. Depending on your background, your career, they have so many different perks and discounts that you can get for your homeowner's insurance policy. So just shop around. That's the best advice I would give you for that. All right, under underwriting and closing disclosure, this is all financing related matters. Essentially, the underwriting process is going to be the in-depth look at your financing application. That is when Brittane is going to be taking a fine-tooth comb to make sure that you are doing everything you had said you were going to do in order to make sure that you get approved and close on your loan. Okay. Right. I don't know if you want to get into depth on the underwriting, Brittane, and then talk further about the closing disclosure. That way, it's coming from the lender's perspective.
So we actually kind of touched on the closing disclosure, which is similar to the loan estimate. The closing disclosure is just basically outlining again the fees associated, the closing costs, and all of that. The underwriting piece is once after we've gotten the underwriting piece comes after the pre-approval, once you've submitted your offer and it's been accepted and now you're under contract. So now this is when we are dissecting all of your expenses, your debts, your assets, your income, your credit, everything that we need to do to make sure those ratios are in line, make sure your credit is intact, make sure you're able to produce whatever funds that you have to come to the table with. This is where, this is where we had touched on the do's and do nots to make sure that all of that's done during the underwriting process. And the closing disclosure must be issued 3 days before the close date or the date of closing. So that usually, once you get that closing disclosure in 3 days, like kind of the closing disclosure is basically like almost where you're clear to close. So that's done 3 days before the actual closing date. So when we get to that particular, it's basically smooth sailing, just as long as no hiccups or anything like that. And like I said, it's just really important to communicate with your lender and your broker. If anything happens, anything comes up, let us know so that way we can jump ahead of it and get it taken care of. So that way we can still stay on track. Like I said, we are aware that things can come up, or sometimes things have been sometimes you may forget that this has been done, or that's what we're here for, to make sure that we can figure this out together and get you to the table, So I've seen it happen before. I have pivoted so much on clients before, and we were able to, with success. So I just want to make sure that we are all on the same page, so that way we can all be at the same table. And that's the closing table.
Yes, we all want to get to the closing table. Yes, so that's fourth quarter, y'all. This is the fourth. We in the last 5 minutes of the game.
We're in there.
So we want to do our best, make sure that all our paperwork is right. The law is on your side with the closing disclosure. It is required by law for your lender to give that to you within 3 days before your closing date. And it gives you all of the details that you need to know for the day of closing. Nothing should be different from your closing disclosure to the paperwork that you receive on the day of closing. Everything should be the same. It is a transparency law that is there to protect you, the buyer. All right. The final thing is your final walkthrough. That is really important. I don't even want to get into a story that I heard about somebody buying a property, and then on the closing day, the property was demolished. You want to do your final walkthrough.
Oh, wow.
Yes, you want to make sure that the property that you made an offer on, the property that you're buying, is the same property that you saw when you made your offer. Essentially, you want to make sure all of the appliances that you agreed with the seller are still there. You want to make sure that if there's any repairs that were needed to be made, you want to make sure that has been done. Anything that you need to reassure yourself that this is the property that you are purchasing and that everything is good with it and there's no issues. That's what the final walkthrough is for. It's typically done on closing day. Before you go to the closing table, you and I will meet there, and then we will do a final walkthrough of the property, and hopefully all is well, and we'll be going over to the closing.
Yes.
All right.
So we went
over the top mistakes already.
Yes. So they're already prepared. They already know what not to do. They already know what not to do.
All right. So this is a Q&A. I didn't see any Q&As in the live stream. I'm sorry, I didn't see any Q's in the live chat. But if you guys have any questions about the home buying process, about market trends, or anything related to what we discussed today, please put it in the comments, and we'll get to it. If we see it after the live, then what we'll do is we'll come together and address it in another video. But essentially, we want to be a resource for you all. We want to make sure that you have all of the tools you need to make your home ownership journey happen. So this is our contact information here. The QR codes that you see next to our beautiful faces are going to be how you contact us. Brittane's link actually goes directly to the application. So if you are ready to take that first step, that's going to be the QR code that you need to scan. Once you submit your application, Brittane will be in contact with you so that you can know what to do next to get that next step started. And then my QR code is just going to be my contact information if you want to reach out to me. Also, my website is there if you want to start just do a preliminary search, because look, we're not looking for properties until we have our numbers together. So we want to do that part first. But it's always good to have these sort of get-togethers as a community to make sure that all of us know what's out here, that we're helping each other, that we're providing resources for each other, that we're coming together, and I hope that you've enjoyed everything we've shared tonight, and that you'll join us again in the future, because we're definitely going to do this again, right, B?
Yes, we definitely have to. Yes. And thank you all so much for tuning in and being patient with us. And, we're so excited to go on this journey with you. I think that's just very important. Homeownership is very important. Like, stop wasting your money on rent. Please, please. You don't have to. It's easier. It's a lot easier than a lot of people think. It's just all about having that team that's going to support you through this.
Yes, if you are paying rent, you can pay mortgage, okay?
Yes.
More than likely, or at least historically, your mortgage is going to be right around the same amount or less than what you're paying in rent. So it is an investment in your future. It is something that, what I always tell people is, when you're paying rent, and just like what one of our commercials said, when you're paying rent, you're essentially just throwing that money away. I mean, I hate to say it like that. I mean, I know you're paying for a roof over your head for the time being, for the moment, but essentially, if you put those same funds going towards a mortgage or going towards the equity in your own home, what that turns into down the line is equity. Mm-hmm. For example, one day you can sell your property or exchange your property. What I say, I don't say buy, or I'm not going to say sell, I say exchange, because we always want to sell with the purposes of buying or acquiring another property. But imagine one day you've paid your rent or you've paid your mortgage over the course of 8 years, and now you can sell that property for over 6 figures in cash, or you can leave the table after having satisfied all of your loan requirements, after having paid all of your transfer taxes, fees, and everything. You can pocket a substantial amount of equity that you've built in your home. And that's the power of real estate home ownership. That is the power of real estate. That is how you build wealth with real estate. Because when you are paying rent, it's not going towards anything. But when you are paying a mortgage or when you're paying into a property, you are building equity, because that property will always be worth something, even if it's just land. The property will always be worth something. And as we've seen in the previous slides, property, traditionally, real estate will appreciate in value. So you will always be earning more over time by owning real estate than by not owning real estate. So it's an asset. It is something that can definitely change your life. It has changed mine, not just as a broker, but as a homeowner myself. And I want to continue to push that. I want to continue to preach that. And I want to continue to encourage anybody that I meet and everybody in my community to do the same. Thank you all. I don't know, B, did you have anything else to add?
Thank you so much. No, ma'am, you said it all. You said it beautifully. Like, just thank you all for joining, and we hope to see you again real soon. And we hope to hear from you. So, yes, there's our contact information. Feel free to reach out to me via phone. That is a cell, so you can text me, you can call me, you can email me. And Miss Tiffany's information as well. Just interact with us. Let us know what you liked about the presentation. Let us know what we can do differently, or please refer people to us. Like, we greatly appreciate you all.
Yes, we appreciate your time. Thank you so much for watching, and to everybody out there, I hope you have a blessed night, and thank you again.
Thank you. Have a good one, everyone. Bye.